I think, first of all, let's just get a snapshot of who you are and your business and what you do.
Great. Should I start?
Yeah, please do.
Hi everyone. Great to be here. I'm Susan, a partner at Felix Capital. We are a London-based investor, investing across both venture and growth stages, with about 1.2 billion under management, investing across Europe and the UK. We have a couple great portfolio companies here in Spain. One called Travel Perk now, which is very scaled in Barcelona, and then and one called Yukio, which is also in the travel space. And excited about the ecosystem here.
Great.
Yes, hello. Good afternoon to everyone. I'm Santiago. I lead BBVA Spark, which is BBVA's innovation banking division. We operate across Europe and across LATAM. We have offices in Barcelona, Madrid, London, Mexico City, Bogota, Argentina, and soon Peru. And we provide banking services and structured lending to high-growth companies, venture debt, asset-backed lending to fintechs, and capital call lines for VCs. So happy to be here.
Great stuff, Lina.
Hi, everyone. I'm Lina. I'm partner at HV Capital. We are a pan-European venture firm investing pre-seed to growth, anywhere from 1 to 50 million euros in the first check. Pretty generalist fund, so we do everything from consumer products, like sports drinks, energy drinks, and so, all the way to ease our aerospace, so rockets and chips, so everything metal to application to consumer. I myself focus a lot on B2B. We actually have a shared history in Travel Perk.
Yes.
So yeah.
Just a client of Spark.
Yeah, exactly. So maybe there's like one.
And now we have a lot
here.
shared with HV. We have a lot of.
Absolutely, yeah. Also with the consumer angle. And,
Great stuff. Thank you. Thank you all for being here. Let's just set the scene, first of all. Let's just talk about the ecosystem as it is now and how it was 5 years ago. How would you place it, Susan?
So actually, 5 years ago, 2021 was a very particular time because obviously we were in the COVID ZERP era, right at the height of the bubble. And now, in some ways, it feels like it's a bit of a we're going a bit back to that level of certainly excitement. Some could say sort of frothiness in a way, but I think obviously now everything with AI underpinned, you could say there's much more substance as well. I think we're seeing incredible amounts of like talent, ambition, or even raised ambition levels from the founders here in Europe, and a lot also that are starting in Europe, building in Europe, but also looking at conquering the world. So I think it's exciting. We definitely had a lull during sort of 23, 24, and now the activity levels I think we're seeing are coming back very strongly. Although it is becoming sort of a more bifurcated market in some ways, where you have the most attractive companies and very ambitious founders absorbing a lot of capital, and then others might be harder to raise.
Santiago.
Yeah. So I would say I echo your thoughts. Many things have changed since 5 years ago. I think to me, the pace at which founders are feeling that they're pulling the rug from below their feet since the last 5 years is incredible, no? Because they had to pivot from growth at any cost to path to profitability, and now AI adoption very quickly, and with a very mixed funding environment, as you said, very much concentrated in certain types of companies. So all of the playbooks that the founders were relying on in the past cycle are no longer valid, no?
Yeah,
Which I think it's exciting
Yes.
in many ways, but it's a big challenge for many of our clients.
Are you excited, Lina?
I'm very excited. I actually think it is, as an early stage investor, right, I actually think pretty much everything is out the door from 5 years ago. I think there's a huge opportunity right now for teams that are really thinking from the ground up. And I think it's a very, this kind of, if it's not clear, anything can happen and anything can be invented. And so from kind of like the pre-seed seed lens, I think there's a lot of exciting stuff going on right now in Europe.
So where do you feel, Lina, that Europe's leading the way? Where do you think it's lagging? Where could it sort of put its socks up?
So maybe this is a bit wishful thinking, but I do find that even on the foundational levels of AI, there's a lot going on in Europe. And actually, that's where a lot of the opportunities are as well. I think we're seeing a lot of pull to sovereignty in Europe. So I think that's driving a lot of like, let's bring energy, let's bring data centers, let's bring like hard chips and metal all the way back to Europe, right? So I think there's a lot of like not just public funding, but private funding going into those kinds of areas. And from there, I think there's a very solid base of research ecosystems scattered throughout Europe and UK. And I think those are the institutions that hopefully are, and I am seeing more and more labs and kind of PIs stepping up to build kind of the next generation of models. So I think it's very difficult for Europe to catch up in many ways on kind of like the LLMs and those kinds of areas, but I still see several kind of new frontiers and kinds of models, right, that I'm very optimistic that we'll see something interesting coming from Europe. I mean, Prior Labs acquisition by SAP is just one example of that, right? It's like a team in the kind of PFN model space that just sold for like $1 billion or so to $1.5 billion, I think was the price to SAP. So I think we'll see more and more of these.
Great. Santiago, where do you see, as Lina puts, the new frontiers in Europe?
I think that Europe is very well positioned, and we have a lot of interest in anything related to hardware, capex intensive, deep tech type of place. We see a lot of investor interest going into there, a lot of institutional interest, and we have a lot of demand. No, it's a much more challenging space to invest and to fund from a banking perspective. But I think that beyond AI, deep tech and hardware-related type of plays are clearly back on vogue.
Okay, we'll touch more on that shortly. But I just wanted to ask you, Susan, about the attitude to risk, because you're based in London,
Yes.
which is more perhaps affiliated with the US attitude towards risk. I wonder how you see it from a European perspective. Are we still lagging a little bit behind when it comes to taking big risks?
Yeah, I think it's changing a lot. I mean, I became an investor about 9 years ago, and I think back then the ecosystem was well significantly smaller. I think there were obviously much way fewer funds as well. Definitely lacking in growth capital at the time, and I think a lot of I had moved from San Francisco, Bay Area to London, and it definitely felt like it was a lot of things were people were sort of looking to the U.S. and felt that here we were still some time behind. And I think that's changed dramatically over the last over the last 9 years. I think now you're seeing obviously on the exit side companies that have really scaled, whether it's the Spotify's or the first generation, but also now the newer generation with Legora and Lovable, which have grown very quickly in the last 12, 18 months. And I think the ambition has been once you have that sort of first, or the prior generation of entrepreneurs who have sort of made it and are able to demonstrate, also companies like Revolut, for example, that have people used to say, could you have a $100 billion plus company based in Europe? I think that's now been proven. I think that has sort of really inspired the younger generation, some who have worked at these companies, to really think bigger. And I think from the VC side, I think. Also, we're based in London. H3, obviously, you guys, and VA, we're all European. But I think, we've also seen how some of our U.S. peers have been acting here in the European market, which is I think given a good jolt to the ecosystem and said, look, actually, you guys were a bit more conservative before, so now it's time to be more risk on. I mean, this has always been an industry of power law, but now you're seeing that play out in an even bigger scale. You have a company like Anthropic that went from nothing to $1 trillion in the space of 5 years, which is pretty incredible. And so I think now that's definitely enabled also the European funds to be much more to be much bolder, I think. And I think a lot of the ecosystem is really coming together to do that. You had the whole Boulder 10 Built in Europe campaign, which I think a lot of us are also sort of, we have companies that are a part of that, and I think that is helping to energize the ecosystem.
Are you seeing that as well, Lina, that Europe is becoming less fragmented as far as taking risk concerned? We had a German and an Estonian together, and the Estonian was saying, we're like the Americans, we're ready, we're gung-ho, we're ready to take it, and the Germans were like, well, we're still a little bit like, we want to put all our investments in savings. I wonder what your experience of that has been.
Yeah, I think there's definitely more pull to come together as a European, let's say, ecosystem. I must say, though, I think we're still very early in that movement, right? I still think that kind of local ecosystems that have density and talent still tend to be kind of standalone ecosystems, right? Like Stockholm, to your example, with some of the recent companies, I think Munich with like defense and kind of industrial, right? Like Spain, in Spain there's Barcelona, Madrid. So I still think there's still quite a lot of room for improvement when it comes to kind of like, the entirety of Europe coming together. I think there's a few policy pushes like the EU Inc., right? And things like that are like kind of on the horizon, but certainly I still see What I see way more of is like talented founders actually going first a little bit to get exposure to San Francisco and then coming back to Europe to build, right? And I think that's fine, but I feel that it's definitely a trend line, something that's still pretty early though right now.
Sure. I'm interested to know what you look at, all three of you, in startups these days, in the founders and the team. Are you becoming more selective? Because of course the barrier now to entry has been lowered by AI. So how do you assess a startup thinking that it's going to be so difficult with so much change happening by the day? Susan, perhaps you could start by answering that
yeah.
question.
No, it's a really good question because, as Santiago was saying earlier, there's been so much change in the ecosystem, and a lot of the playbooks are no longer valid. And I think that's probably one thing we've realized is the only constant is change. And if we think about our portfolio and the ones that have really, the founders that have really adapted and seized the opportunity, I mean, I think it's really driven by people who have that boldness, but also that sort of willingness to learn and change very quickly, and we see that with companies that started in the pre sort of ChatGPT launch moment, to some that have really embraced those tools and transformed the entire way the company works, and others that maybe struggle a little bit for that change. And so for us, it's reinforced the fact that it does come down, as you guys know, it comes down to founders really, especially for venture when you're backing at the earlier sort of seed Series A stage. It comes down a lot to founders. I think it's also what's exciting is now we are starting to see companies, because a lot of the barriers to everything from building software products to distribution have changed. We're seeing companies get traction incredibly quickly in ways that they didn't before. And so we've seen a number of companies that started maybe 6-9 months ago that are now already winning multiple sort of large contracts that have gone from 0 to 2, 3, 4, 5 million ARR within the span of months, and showing that pace, which is very exciting. And so I think for us, because we know business models, products, they will probably evolve quite a lot in the coming years. We're looking for sort of just phenomenal founders that are looking to target sort of interesting markets, whether it's an existing market or sort of the edge of a market that could become very large. And I think the other thing is we are all also quite consciously thinking about what are some areas that are moats that will endure, because for sure, obviously Anthropic and the other large LLMs will grow, will continue to scale and go into different areas. But I think there are also areas where if you're deeply embedded in specific workflows, if you're regulated, if you have proprietary data moats that compound, those will continue to be defensible.
Thank you. Santiago, I wonder if you have a slightly different approach. Being a bank, obviously you offer venture debt to startups. How do you assess a company before you decide to loan?
For us, it depends very much on the stage. So we fund early stage companies post-product market fit, and we fund also later stage growth companies. No? So for the first ones, for us, it's a mixture of the promise and the evidence. There's a big component on the promise, but we need to see some evidence that the things are going in the right direction in terms of unit economics, in terms of the trajectory that the company is going. So that is a big component, but then the promise, no? The founder, how savvy the founder is, resilience of the founder, and the companions, no? The VCs that are backing them. That's the way we assess companies in that earlier stage. For later stage, it's much more about the evidence, no? So, because obviously we are a credit provider, and in those cases, we are mostly funding as a bridge to profitability, and it's much more traditionally financial in a way, the way we underwrite, with a lot of hypotheses, of course, but it's very important, and in most of the companies that we have today in those stages, many of them are coming from prior cycles, like growth at all cost type of cycles. So for us, it's very important to assess how fast they've been able to change moods, correct course in terms of cost, in terms of cost strategies, and so forth, because that gives us a lot of credibility on how they're going to be able to adapt in the future.
Yeah, I'm interested to know how founders' attitude has changed towards debt generally now in startups, because obviously it used to be just VC firms. So I wonder now it's becoming more commonplace. You've been operating for 4 and 5 years. Yes. You're finding that has grown the interest.
It is. It's a difficult equilibrium because, I mean, to your point before, how do we assess companies? In the growth stage, for us, it's very important if you have an experienced CFO. Like traditionally, at earlier stage, companies have like a controller, but later you need to have the proper financial advice, in-house experience, and then financial advice, because the capital stack for each company has to be different depending on the needs and the situation of the company. So there are some investments and some stages of the company where it's equity, should be funded by equity. There are some in which you could have complement the equity with credit, and depending on the use case, there's different credit instruments. So it's the good news, I guess, for the ecosystem is that there are players such as us that provide very different credit products adapted to the different stages, and demand is picking up, but also there's a lot of educational effort from both sides that I think is very important, because credit is not the same as equity. Credit you need to pay back in a reasonable time frame, so you need to be able to do so.
Sure, and
comfortably.
Lina, I'm interested to know, we're obviously talked a lot about the people behind the startup, but the investment itself, we just had on, I don't know if you heard the last panel, but they were talking about the future is perhaps measured by the impact it has on our collective future. I wonder how much you think about that when you're making decisions about investments.
I mean, that's a very broad question, right? I think maybe I'm a little bit biased here, but I would like to think that every single investment we make in the early stages has tremendous impact on our collective futures. I mean, I think maybe where the direction of that question is going, though, is maybe a little bit more around like ethical AI or social policy and things of that nature. We actually do very proactively think about those kind of general, let's call it, I mean, we kind of wrap it under ESG, right? Like, I think it is part of our responsibility as capital allocators to question the kinds of companies and the kinds of products that we would like to see in the world, right? I must say, though, it is not a pivotal part of our investment decision making. Definitely the first one is like, how innovative is this thing, right? How novel is it? How interesting is it? How big of an addressable market? All of those classical kind of questions. What is the quality of the founders and the founding team, right? But I think in terms of, especially when we go a little bit more into the frontier, or when we go into topics that are related maybe more towards defense, I think those kind of ethical or kind of social type conversations have definitely become more of a dominant one in our committees.
Let's talk a little bit about scalability, Susan, because would you suggest for a startup to think about scaling internationally from the get-go, or what makes the difference between a startup that's only thinking regionally initially and one that's got sort of more of a long-term vision straight away?
It's interesting. Yeah, I think there's again, back to sort of your question about how that's changed. I think that we're also seeing quite a big change in that, where 6-7 years ago, I think founders were thinking more original, from their own markets, and I think now you have a lot of, especially the new generation of founders, which are thinking international from day one. I think a lot of it depends on also the market they're targeting and how large that TAM is. I mean, I've invested in a few companies in Sweden, and I think there, because the domestic market is so small, it forces sort of all the founders to really think international from day one, which is, in many cases actually been a real benefit to them, because they've designed their products to be sort of work across different cultures, different languages, different consumer behaviors from the get-go, and it's enabled them to have really scalable things. Whereas, in the past we've seen companies that maybe start in Germany or France, it's much more tailored to that specific market. And I think, back to Lina, to your point, I think sometimes that's where it has also been tough to see the EU as a whole, because each market still has a lot of its own nuances, and particularly and from a go-to-market perspective, whether it's consumer or it's B2B, it's usually you have quite specific go-to-markets. You have sometimes slightly different regulation. You have different buying behavior. You have if you need to implement with existing systems, there can be a lot of fragmentation in existing ERPs or systems of record. So that has made it a bit more challenging. And then I think for us, we've also probably the 40-50% of the portfolio has also gone from Europe or from the UK to the US, which is also obviously another big market. And sometimes there's a trade-off of like, do we go to the US or do we go to expand across Europe?
Yeah.
Maybe can I just add something to that? Something I've observed in maybe the last like 12-ish months. I think maybe even longer. I think everyone in the world right now is asking themselves proactively, do I buy AI, right? What do I do for my organization? So I think if you're a founder that is building, even locally today, I would really encourage you to think about a global go-to-market strategy. I think the barriers to thinking about, right, localization, like building all the translation and software and all of the things that were kind of distractions like 5 years ago are probably less true to like not true at all today.
Yes.
And so I think there is a window of time right now where if you want to seize the moment of like all this money coming out of classical software and going into like agentic or AI kind of like native systems, I think like now is a time, right? So this is just one thing I wanted to
100%.
add.
Yeah.
100%. I would add to that, but that depends very much on the business model. So clearly, software-related business models where generate economies of scale can be achieved with very little market shares in different countries.
Right.
It's very different from business models in which you have you need critical mass in each country because you may have a non-digital cost base, no?
Yes.
That is very intense. So it depends also very much on the business model.
Yes,
So
absolutely.
in those type of business models, like I don't know, like Japan Talent or Cabify, companies of this nature,
Correct.
you need to go country by country. You need to consolidate first before you go, unless you have very, very deep pockets and a very strong team, which the deep pockets component is not always very stable, no?
Right.
Because you may have it at one moment in time, but not forever, no? So I will be very cautious in those two business models. I will prioritize reaching sufficient scale in one country before you go into other ones. But the other ones, the Lovables of the world or 11 Labs, of course, go for the world ASAP.
Absolutely.
Yeah.
We don't have too much time, and I do want to put some questions out to the audience before we all go to lunch. So would you put your hand up if you've got a question to our panel on anything from scalability to competitiveness? There we go, at the back. Someone could hand a microphone. Thank you very much.
Good afternoon, and thank you so much for your riveting thoughts this afternoon. I work with software companies in their cloud business and adoption. So my question to you folks is, given the hype around generative AI, how do you see that transforming the ecosystem? And are there KPIs that you're looking at already which measure revenue generated through generative AI?
Maybe just to restate the question, is it a question on has some of the things that we've been looking at KPI-wise changed with AI native companies? Is that?
Let me clarify. So in your portfolio companies, where do you see Gen AI already driving a revenue impact, or do you see that yet?
I see. Maybe, yeah. So absolutely, it's making a massive impact. And where we're seeing it probably the most, and probably we all feel it and know it in the audience, is definitely in the engineering and kind of the product to market velocity.
Sure.
I think there's more and more startups that are leveraging AI capabilities in go-to-market, sales, customer support, right? Like kind of different areas of the business where kind of language or some sort of like content is like the base like node. But I think this is also like rapidly changing, right? And I think like with native AI companies, I see there the growth is just kind of on a different scale, like to what like Susan was talking about earlier.
Yeah.
I think there like all the metrics kind of tend to break, right? Like we see profitable 0 to 10 million kind of startups in the first 18 months, and so there I would say it's like 100% different kind of paradigm. But for existing portfolio that has managed to leverage AI, I mean, we're seeing like absolute impact on like many different fronts.
Yeah, so I would add to that. Basically, if you're not an AI native company, as long as SG&A over total revenues is any meaningful, you have a lot of upside there. And the bigger that component is, the more urgent it is for you to adopt, because you can generate a lot of percentage points of EBITDA margin very quickly.
Great stuff, thank you. Anyone else, any other questions? Yeah, up down here at the front, please. Thank you very much. Oh, okay. Well, you can you can shout it out. Oh, here we go. Yeah. No.
I guess there's been a lot of discussion going on the interaction between the US and European innovation ecosystems. My question would be, any thoughts on the interaction between the Chinese and the European innovation ecosystem?
I don't know.
I would say from BBVA.
Opportunity and challenges. Whatever.
Yeah, I think we've had some interaction. In my experience, more related to hardware-related place. In China, there's been a lot of innovation in the EV automotive industry value chain, and obviously everything related to clean energies. And there's been some interactions with that, but I wouldn't say at the startup phase. More once startups, either in this side of the planet or on the other side, as startups have matured, then there is a lot of interaction. But I would say it's more later, more industrial stage. I haven't seen much at the very early stages.
Yeah, I'm thinking about, particularly in our deep tech portfolio, I see a lot more kind of collaboration with the market in China, whether that is like for supply of chips or hardware, or straight up just manufacturing. Like we're invested in a company called Neura Robotics, and they have their core manufacturing arm. They're a German company, but have the core manufacturing competency in China. So I think as we see a lot more of these kinds of companies, right, like deep hardware, deep tech, like scaled out manufacturing, we will probably see a lot more collaboration with China. But as of right now, I think that this overarching narrative of like European sovereignty is like the overarching narrative, to the extent where it's like US or China, it doesn't matter. We need to bring in capabilities internally to Europe. So that's a little bit more where I'm finding like pool amongst like operators and investors and LPs, et cetera.
Agreed. Yeah. We also, I think on the hardware side, or even just hardware, anything physical products, the supply chains are very intertwined. So I think there's a lot of collaboration there. I think we've also seen some in our portfolio companies that are building on top of that are quite model agnostic, that have used some of the Chinese labs like DeepSeek. I know C-Dance on the video side has been incredible. So we have one that's doing a visual sort of AI for content creation, which is working with that. I don't think we've seen as many Chinese funds that have come and started investing into the European ecosystem the way that American funds have. But I'm sure that could also.
We actually see it more in LATAM, actually.
Oh yeah, in LATAM. Okay,
Yeah.
interesting. Okay, interesting.
We're out of time, but just before we go, we started off by looking backwards. Just let's look forwards 5 years. How do you see Europe within its ecosystem in half a decade's time, starting with you, Susan?
Oh gosh, wow. I mean, as Sue said, it's very, very difficult to forecast the future. I think if we sat 5 years ago, I would have a hard time to think that within the world we live in today. I hope, in 5 years we'll see the first $1 trillion company coming out of Europe.
Yeah,
really, I think
I
that
see
would
a
be
very
amazing.
bright future in the next 5 years. I think all of the building blocks are there, and the domino effect is starting to happen. We are seeing pools of capital being freed up for venture. We're seeing second-tier ecosystems such as Spain catching up quickly. And we are seeing the professionalization of the sector as an industry. So I think those are very important building blocks. We still have a lot of things to work on, but yeah, I see it promising.
Yeah.
Absolutely. I think I'm just going to echo that optimism. I think we are seeing a lot more teams coming out of foundational labs emerge here. I see a lot happening in like robotics. I mean, we also invest in a company called Izar Aerospace, talking about the first $1 trillion company. Hopefully, one of those is in the portfolio. And I think there's so much now room, right? I think what I maybe would leave this conversation with is in the face of AI and all this change and uncertainty, to maybe look at where there is like plentiful opportunity or abundance rather than scarcity, because I think there's absolutely like entire new markets, entire new capabilities that are opening up right in front of our eyes, and it's just about kind of like being able to identify and execute on those opportunities.
Thank you so much. Some great takeaways there to
Thank you.
finish off with, but I think we can safely say that the future is very exciting and we should all feel positive. So thank you.